It's really a pleasure to be here. I appreciate the council inviting me to be here today. There's been a lot of activity going on since 2010 on exchanges and other aspects of implementation of the Affordable Care Act. But if you all want to get up and put your ear to the ground, you can hear the train about to pull into the station. You might hear several approaching at one time from opposite directions. I hope I don't say anything that may upset Ms. Brooks LaSure, but Brett has assured me if she jumps up out of her chair, he's going to protect me. I'm going to give it to you straight today. And so I hope the information I share with you today is helpful, but I'm going to give you a little bit of perspective as a former insurance regulator. I spend a lot of my time these days advising healthcare providers and other entities that are going to be affected by the impacts of the implementation of exchanges and other aspects of the Affordable Care Act, because there are other entities other than insurance companies who are going to be greatly impacted as we see the ripple effects of the implementation of exchanges. And so let's think a little bit about what exchanges were intended to do. They were intended to provide an organized marketplace. Organized, you see I've underlined that word there, for the individual and small group markets beginning in January 21 of 2014, and so to this mandated population. And so now, recall now, we've got the three formats: the state-based, the partnership, and the federal. Now, they're all going to arrive at the same time, and that's why I say we've got multiple trains pulling into the station at one time. And so, the reality is only, 18, 19 states have committed to do a state-based exchange. They've all started to submit their information to the feds, and I'll call them the feds. I hope that doesn't, okay. In January, HHS will either approve them and give them the good housekeeping seal of approval. They might conditionally approve them and say, well, you're almost there. These are the things that you need to do to get there. Or I think there's still a possibility that they may reject a couple of them. There are some states that got to the game a little bit late, hadn't done a lot of planning, and the reality is, as Brett said, this is a heavy lift. There's a lot to it. There's a lot of moving parts to this. So there may be some states that just don't make the cut by 2014. We'll see. But I think it's a possibility. So I have people that come up and ask me. I'm still heavily engaged with the National Association of Insurance Commissioners, and they're very engaged with HHS and providing a lot of regulatory support, information systems to the implementation of exchanges. And people ask me, why hasn't this been more broadly adopted? And it's really been, a soup of issues. It's been the politics, it's been the mechanics, it's been delays, just a number of things that have resulted, I think, in it not being more broadly adopted. And uncertainty. Uncertainty is just difficult. It's difficult for states to budget. It's difficult for states, having worked in the state system, having worked with legislatures and put together a budget, put together regulatory systems. You just can't plan when there's this much uncertainty. So it's been very difficult. But we'll see whether the intent is achieved, at least in 2014. Now, where are we across the map? If you look, my map's a little different than Kaiser's map, because I read between the lines in the news based on my experience and try to predict where states are going. And so you'll have my map. It's a little bit different. It'll be in the materials, but this is my crystal ball effort on where I think some of the states are going. Now, the white states are still on the fence, but there's some states that have made significant planning. Utah is still technically in the undecided column, but I think they're absolutely going to go. I think they're still scuffling a little bit, but we'll see. There's some of these states that are still technically in the undecided, but we'll see. The politics are still in play, but they've made significant efforts in the planning effort. So now, my timeline looks it makes your head hurt, it should. It makes my head hurt. So, you know, for states that have decided to implement with no enabling legislation in place yet, I'm sure there are legislators that they're in this room say, hey, hold on, just wait just a minute. You know, we have a role here, and you absolutely do have a role because, you know, you make the policy. You know, I was in the executive branch, so I know how it works. You make the policy. They implement the policy. You have to give the permission to pay the bills. And the bills are going to come for the exchanges. Whether they are, you know, related to a state exchange, you still have to give them permission to pay bills related to the federal money that comes in the partnership exchange. The bills are going to come. There are a lot of other things that are going to come related to exchanges. For example, in the reinsurance. Well, the way the reinsurance model is going to work, you have a number of very large employers in your state that are self-insured groups that are not going to be in the exchanges. But guess what? They're going to start getting bills for the reinsurance on the exchanges that they're not even in. And they're going to start knocking on your door wanting to know what the heck is going on. Why are they paying for the reinsurance on the exchanges? So you're going to start getting a lot of pressure from all over about these exchanges. Exchanges you may not even be operating if you're not in a state-based or partnership exchange. So there are a number of very important issues for you as legislators, as state officials, that whether you may have said, oh no, we're not getting mixed up in that exchange business, let the feds operate it. Forget it, it's going to end up on your door. Your insurers, if you're about to go into session, get ready for the hard court press for a partnership exchange if you didn't do a state exchange. Get ready for the hard court press. And we're going to go through some of the pros and cons of that in just a minute. But I wanted you to understand what the next few months look like, regardless of what type of exchange may be going on in your state, because they're all about to collide. And so this was intentionally supposed to make your head hurt. Now, I am from the South, but I don't play the banjo. But if I did, this is where I would start playing that great song from Smokey and the Bandit, you know, Jerry Reed, Long Way to Go and a Short Time to Get There, because that's the song that applies right here. So this would just make me, if I was, wow, it's a great time not to be the insurance commissioner in Tennessee. So condolences to my good friend Julie McPhee. But this is an extraordinary amount of activity that's about to go on in the next really 8 months. 8 months. And it's going to impact your insurance companies, your insurance regulator, your insurance brokers in your state, and you as legislators. So, let's walk through it. Yes, I know. All right. Very important. 1,000 pages of regs, as Brett said, just came out. They've got to be digested and reviewed. You've got to determine whether you're in whether you've got the federal exchange coming, whether you're still considering the partnership exchange, how that could impact you. So your Department of Insurance, I'm sure, they're very happy campers, I'm sure. But they're going through all that information. And the folks in the state that are reviewing these options are trying to digest them. But I would urge you to try to get a briefing, try to understand what the impact of those are, because they're very significant. They're very significant in the way that they would impact your insurance companies that may participate in the exchange particularly. So the states that may still be on the fence have a little bit while longer. Now, I had warned Brett that if I was going to contradict him, since I'm going last, see, I get to do that. And so I warned him that Southern women, when we're about to clothesline you, we say, bless your heart. And so, Brett, bless your heart. Brett said, if the state hadn't made up their mind, you know, they might still be able to do this heavy lift. Bless your heart, Brett. unless you had a big planning grant, and you've done a lot of work, and you're right up to the line, like Utah, and they can still pull it off, and it's just the politics keeping you from making a decision, I don't think you can pull it off at this point. You better look for the on-ramp, I think, in 2015. Now, Brett's gonna pull me out the hall, I can see it on his face. But that decision in December, unless you're really right up to the line, you've done a lot of work, it's gonna be really difficult to jump into the stream at this point. So, because it is a lot of work, a lot of decisions, a lot of planning, a lot of effort. But some of the states, even they are still leaning toward the federal exchange, had done a lot of planning. They could still change their mind because they've done a lot of work and evaluation to get to the point where they could still select a state-based exchange by December 14th. Of course, HHS will make up their mind in January whether to grant approval or conditional approval. They're going to finalize some standards, very important standards, on how plans will be certified for participation in the exchanges. Now, we had a very unfortunate delay that has occurred. There's a system called SURF that the National Association of Insurance Commissioners has offered since the 90s, that all insurance companies have available to them to file their rate and policy form filings on a multi-state basis. It saves them millions of dollars because they can file it one time and multiple states can review it. They don't have to file it 50 different times. And so SURF has been working for the last 2 years to provide a qualified health plan platform that insurance companies that were going to participate in the exchanges then could file all of their information in order to be certified as a health plan in an exchange, in order to file their rate and form information in an exchange. And so they've been working very hard for the last year and a half to try to get that platform, that electronic platform built. It was supposed to have been released at the end of December, and unfortunately, due to delays in having all the information they needed to build the system templates, it has been pushed out to the end of March. And this has caused a great deal of angst among the plans that intend to file to participate both in state, partnership, federal exchange. So it is going to cause a serious squeeze. Oh, let me just snap it here. Right here. This is major crunch in this period here, operationally, for all the exchanges, because they'll all be trying to load all of their information at one time right then. And so it's going to squeeze the states and really the feds and the partnership exchange in this period to review all the information at one time in order to be able to certify that we have qualified health plans ready to serve all of the exchange enrollees in time for open enrollment to begin here in October. We're just 10 months out, really. Yeah, 10 months out from throwing the doors wide open and inviting the millions of people to come start enrolling, whether state, partnership, federal. Now, another important delay that's occurred, we've still got a major question mark around how navigator programs are going to work. CCIO representatives at the National Association of Insurance Commissioners 2 days ago announced that they would hopefully release the funding opportunity announcement for the navigator program, which is your brokers, it's your agents. They're going to help people try to enroll in the program. They would have that announced, released in the spring and awarded in the summer, with training somewhere in that time frame. So, if you're a state legislator, expect to see your insurance agents in your state. They're coming to see you. This is the navigator question has been a huge question in the exchanges ever since the act was passed, because of the way it was written and the way that the navigator program is structured in terms of how insurance agents are included. And so this squeeze, this push on how the insurance agents are going to participate to help I mean, I think, as a former insurance commissioner, I can tell you to get millions of people enrolled, it will take thousands of navigators. And so that's just based on my personal experience, anecdotal experience there. And so they have all got to get awarded, they've all got to get trained for the state-based program as well, the standards and the training. I mean, some of the states, this is the one area, the navigator area, as I'm looking at the individual states that have done significant planning on exchanges, the navigator programs have sort of been pushed to the back because the states have been more concerned about the infrastructure, the IT infrastructure and the qualified health plan infrastructure, those type things. Navigators have sort of been pushed to the back. So if your state is doing state-based exchange, expect to see some insurance agents in your legislative office saying, hey, we're a little worried that we're getting pushed to the back. And so, because they are very concerned, and I think probably rightfully so, because it's going to take a village to get these people enrolled. I mean, even the simplest computer system is still going to require some help from the navigators. So, if you're a state that has not made a decision and is going to the federal exchange, look for the on-ramp. Look for the on-ramp for the state-based exchange. Bless your heart, Brett said, it won't be as easy as you think, but there are planning grant opportunities coming related to the on-ramps. Watch for those, because I'll be honest with you, to sit back, if you sit back, watch how this unfolds, look to see where the push points and pressure points are, and you may see some of the kinks get worked out of the system, and you may feel better about it, and see the opportunity to participate in either at the partnership or the there we go. Now, state exchanges, like I say, Brett says if you're strong, you might still be able to do it now, unless you're significantly down the road. I think you probably may have missed your window, but I'm completely and totally biased. I think state regulators rule the day. I declare that. You can tell why I'm biased, but it's based on my own experience of dealing with consumers that called who are in self-insured ERISA plans who could not get satisfaction from the Federal Department of Labor, needed assistance. I think the closer on the ground the regulator is, the better off consumers are. Insurers definitely would like to dance with the regulator closer to their zip code. I think from the state exchanges, it's definitely pro, both for the insurers and the consumers to be dealing with the state. The other benefit I think I've already seen in multiple states is you get some real integration and possibly upgrading your state Medicaid eligibility systems related to all of these infrastructure enhancements. If you are careful in your implementation, you can get some healthcare innovation and cost control opportunities. Yes, the window is still open for 2014 and start with 2015. I think a seriously overlooked opportunity, which I'm hoping might manifest in 2015, is regional exchanges. Not necessarily as much on your market as on the administrative infrastructure. I've been very, very surprised that states are all creating the wheel individually and are not looking at regional teaming for the back office infrastructure. And so I'm really hopeful that as more states that have sit back or may not want to get involved now, as they look for the on-ramp, they'll consider regional back office administrative teaming to cut some of these costs. I think some of the estimates for administration of the exchanges are $30 to $50 million startup, $10 million a year. I don't know if that's still an accurate figure, but I seriously think there are some serious cost savings that could be had by regional teaming for that administrative infrastructure. And I'm really, really surprised that more states have not considered that at this point. Like I said, there's my bless your heart for Brett there. I think you may have missed window unless you were seriously down the road already. Drawback, of course, is at this point, there are a lot of the requirements that are not within your control, but you're required to implement them. Those are a little bit hard to explain to people on the other end of the phone. And then, of course, there are the costs. The partnership exchange. There haven't been as many states that have come around to this yet, and I'm a little bit surprised. The insurers, if your state has not opted into a state-based exchange, get ready. The insurers, you've got till February 15th, and the insurers, if you're a legislator, get ready, because they're coming. They're going to start pressuring you to do this. It's a two-tiered system that you can sign on to. There's the plan management function, the consumer assistance function. Consumer assistance is a lot of work to help your consumers enroll. The plan management is more what your insurers are going to be interested in to see you sign up for, because it allows you to certify their participation in the federal program. You oversee it, you oversee their market conduct, you review their rates and collect quality data. Then you pass all that along to HHS. They have the ultimate say-so. Don't be fooled, it's still a federal exchange, but you're actually the boots on the ground and do the first screening. You do all of the review, and then you make recommendation to HHS. And so as long as your systems are sound, you know, you are really the front line oversight. And so the insurers are going to prefer this. I think the real benefit here that you should consider in a partnership exchange is that you get first-hand data, first-hand on-the-ground information about how the federal exchange is operating. You're going to get some valuable information. So if your state is considering in the future taking the on-ramp to state-based exchange, this could provide you with some very valuable information about how the market is being affected by the federal exchange and how you might want to evaluate that then. And then you might get some supplemental funding for your regulatory processes. So you're going to have to amend your state laws. It's still a federal exchange. You don't have the ultimate authority. And then, unfortunately, there have been some delays, and there's some the ultimate resources necessary to implement this, in my mind, are still a little uncertain. But your insurers are going to push you to implement this if you have not made a decision yet. The consumer assistance, like I say, this is very heavy, labor intensive. You're going to be the first-hand oversight of the Navigator program and assisting the consumers to get into the exchange. So be ready. This is very labor intensive if you sign up for this tier. There are two tiers in the partnership. So your brokers are going to push you to sign up for this tier. So you just have to decide whether you want to be ready. You'll have to be seriously staffed to do this. This is beyond your current Department of Insurance staffing. So be ready. Important pieces that we're still missing: the Navigator program details and training. We still need that. Chiquita mentioned the OPM plan. This is a very scary question mark for insurers. The OPM plan basically is equivalent, maybe the equivalent of the federal employee health plan, and it's going to be sold in multiple states. Like she said, HHS does not administer it or regulate it. OPM does, Office of Personnel Management, and it's making the insurance companies very nervous because they don't know much about it yet. There's only been basically a fact sheet, and OPM has only said, we hope to have a contract in place with at least 2 insurers by summertime. So the insurance companies are very nervous about what this is going to do in terms of competition. They've said they want it to be a level playing field. Well, okay, give us more information. Where's the transparency here? So this is very nerve-wracking for the insurance companies right now. Like I said, the SURF plan management software delay is going to cause a serious crunch in mechanics on the implementation on all of the exchanges. We're still waiting on some clarification on Navigator and shop regulations and partnership that CCIO promised this week in the NAIC briefing. The representative said that they would be issuing that soon. We're still looking for details on the federal exchange marketing plans. There are still some serious questions on how the premium tax subsidy and cost share mechanics and exchanges are going to work. Many states have raised that issue to them and asked for clarification, so we're still waiting. Now, there's also a very overlooked option that I'm going to talk about in a minute about the basic health plan, the state basic health plan, which I'm going to talk about. I want to put this on your radar if you're a state legislator. If your state is on this map in red, there is still oversight of your state. Brett's cutting me off. Of the state.
Bless your heart.
Of your of your state insurance company rates. If your state is on this in red, HHS is still reviewing your insurance company rates because there's some glitch in the way that your insurance department system or your state insurance law works. And so if you're a legislator in one of these states, I encourage you to work with your insurance department to help do whatever it is you need to get the feds out of your insurance company rate review because you have some very fine insurance departments and they can review those rates, and that way HHS is not regulating, reviewing your commercial insurance market rates instead of your state insurance department. So this has been going on, of course, since 2011. Basic health plan, last one. This is a largely overlooked option in the Affordable Care Act. It provides states an option for the population between 133% federal poverty level to 200%. States get the premium subsidy and the cost share subsidy and can contract with a managed care plan and provider network. There are very few requirements, no deadlines to implement. It will impact the exchange population possibly in the financing base. And there have only been 9 states that evaluated it last year before the Supreme Court opinion threw the Medicaid expansion into questionable chaos. And so this is an option that states ought to go back and look at. If you're a red state or a no-go state that's not going to do anything on Medicaid or on the exchange, go back and look at this option because it's the basic health plan option in the Affordable Care Act. It might give you an opportunity to design a health plan system for that particular population that gives you much more control. It does not have a lot of federal bells and whistles on it. And so practical effect, we're going to see some significant confusion in the next year, but we'll see what happens. So, the reality is we've got, like I say, a long way to go in a short time to get there. We're going to have a lot of heavy lifting to do in some of the states, and I would encourage you in your individual states to set up really just a dialogue with your insurance companies, your providers, and your insurance department, just an ad hoc committee as you go through your sessions and thereafter to talk about what you're seeing as the dynamics regardless of what kind of exchanges in your state, to keep that dialogue going so that you can evaluate those impacts and try to understand really how this is evolving because it's going to be very dynamic. Thank you.
We've been meaning to look round for a better deal on our health insurance. Like most families, we want great financial deals, whether it's a better mortgage, higher interest on our savings, or a pension that will provide when we're older. But when it comes to our family's health, it's not just about the cost. We want to know that if we need to use our health insurance, we'll have excellent cover and great service.
We've been with our current health insurer for over 5 years, and we've not made a significant claim during that time. Even so, our premiums have increased. We'd thought about switching insurers, but I was worried they'd ask lots of medical questions and apply more exclusions than we currently have. But I was wrong.
Not for the first time. I called Standard Life and was surprised they could cover us on the same underwriting terms as our current insurer. They listened to what we had to say talked through the plans available, and because of our healthy claims history, have even been able to offer us a higher no claims discount than we expected, which is great, as that really helped reduce the premium.
We've decided to switch to Standard Life Healthcare.
Switching your health insurance to Standard Life Healthcare is simple. Our helpful advisors will ask you a few questions about your current arrangements. They'll then be able to provide you with a quote and a starting no-claims discount that could be as much as 50% or in some cases more. Just like Adam and Penny did, give Standard Life Healthcare a call and ask us how easy it is to switch your private health insurance from your current insurer. You could even switch to us over the phone.